All right, hey guys, we are today updating my trading and investing plan. Now, I created a trading investing plan not all that long ago, and it's a good plan. I like a lot of things about it. But today we are updating my trading investing plan for my example account that I use to go through stocks with you guys because I want to do a little bit more investing, and I realize there's a small flaw in my plan for the sake of what I'm trying to do with this account. So let's go ahead and jump on in. So what I'm going to do is I'm going to share my old trading and investing plan, and we'll kind of walk through it line by line, see what it was, see what we like about it, and then what I want to change on it, and we'll kind of walk through it that way if that makes sense. So let me share this. Okay, great. So trading and investing plan, what are we looking at, right? So I want to walk through it, see what we're doing, and then we'll change what we need to change. So first up is my first section, how we fund the account. That stuff all looks fine to me, right? Where am I funding it from? Personal checking account. That's my money from my regular job, right? How much? I'm putting $50 into my account. Now, that is every 2 weeks. So I'll just say, 100 per month, right? And then that's really clear. But, that's not a real change. But putting $50 in, and we're putting it in on the 1st and the 15th of every month. So that is perfect, right? No issues there. That makes sense. Again, that's a pretty small amount to trade with, but that I think is a pretty reasonable amount, right? It's not real hard to find $100 a month, $50 every 2 weeks. When I first started, that's exactly what I was doing, and I was just putting that in right off of my paycheck every 2 weeks. So kind of a cool little setup, and we'll keep it with that. So moving on to the next section is my trading plan, right? And this I don't want to change a whole lot in either, but I want to clarify a couple of things on this. So first section is how much money am I going to put in each trade? So about $200 per trade, I think is fair, right? It's kind of reasonable. Right, we're putting in $100 a month, so 200 a trade. I think it's still really important to make sure that every time that you enter a trade, you want to put in the right amount of money, right? You don't want to put in too much ever on any trade. You want to make sure you're putting in the right amount, um, and we're able to do that. The one thing I will say on this is that I would put just kind of a side note is I'm going to say up to around 250 if the stock costs that much, right? That much. And the reason for that is that I've seen a handful of trades recently that, they're 210, 220, 230, $250 stocks, but they're set up in great trades. There's some that are $800 stocks. I don't want to go crazy, right? So 250, I think, is kind of a max that makes sense to me. But I'm basically saying, hey, you know what? $200 is normally what I want to have in a trade. But if there's a really good trend and it's $210, then I'm still going to be willing to take that trade. So little caveat there, but not super crucial. I do think that said, right, be careful with this idea because you don't want to be taking $200 trades, see an $800 stock like, BlackRock, and say, hey, it's in a good uptrend. Let me go buy it. And then, if that goes against you, that's a big hit on your trading account. So be careful with that. But I do want to, kind of put that caveat in there. Hey, yeah, I'm willing to stretch that just a little bit, right? If the stock costs that much, then I'm buying only one share. So what risk reward am I looking for? A risk reward of at least 1 to 2. So I'm willing to risk $1 to make $2, right? So maybe I'm willing to risk $10 to make $20, right? Hopefully that makes sense. I think that is fine. And of course, I don't always have to take the full $2, right? And I don't always have to lose the full $1. But that's kind of what I'm looking at, right? That's my risk reward on my stop loss versus my profit target. How many trades am I going to take each month? I think at least 2 per month is perfectly fine. And basically, the idea on this, is I'm taking as many good trades as I see in a month, but at least 2, right? I want to try to take not less than 2 trades a month because that just is not trading, right? That's excuse me, that's avoiding trading too much, and I do want to be taking trades, but I want to keep a little cushion of at least $50 in cash in my account. I think that is perfectly fine. And I will say on the 2 trades per month, that doesn't have to happen. Like if I don't see any good trades for a whole month, it is what it is, right? I won't necessarily take the 2 trades if there's no good trades, but I want to make sure I'm getting into trades, right? There's through the course of a month, almost always going to be some good trades to take. Granted, I am only looking at doing trades to the upside in this account, so there's some limit to that. But there's always stocks making moves, and there's always potential to make money in the market. So I want to take at least 2 trades per month when I can. And then I do want to keep that cushion. So that's perfectly fine. Nothing to change on that. Next question is, what type of trades are you going to take? So I want to be buying stock in uptrends that are buying stock that is in an uptrend or that's breaking out of a downtrend, moving up. So it's breaking out to the upside. I think that's fine, right? Buying up trades. I'm not buying any puts on this. I'm not making any money from, yeah, I'll say that. I'm not making any money trading on stocks moving down in this account, right? I do in my own personal trading, but that's not what I want to get into in this, right? We're talking about how to get started in the stock market. That's the whole point, and that's really what we're focusing on at the moment. So we'll keep that, right. We're buying stock that is in an uptrend, that's breaking out of downtrends, and that's moving up. So that's kind of what we're looking at. Now the investment plan, right? You might notice I haven't really changed anything yet much, but the investing plan is kind of where I want to change things around a little bit because I want to be doing more investing. I realize that with the current investing plan that I have, right, it's a good plan. It makes sense. However, it doesn't allow me to show the investing the way that I really like to show it. And this is not far off from some of the trading that I've done in my personal accounts, right? Not far from the investing plan I've made there. But I want to make sure that I give good examples. And we're kind of heading into what looks like it could become a bit of a downturn in the market, which presents good investment opportunities, right? When things are down or moving down, that's a good time to be buying so that when it turns back up, assuming you buy wisely and check your fundamentals and all that, then you have a lower buy price. You can get more stock for the same amount of investment, right? All these different things that help you make more money in the long term with investments. So with that said, look at that. I got a stock alert, so I'll have to look at that when I'm done here. But with that said, I want to change my investment plan a little bit. So I was saying I want to invest only with profits that I've made on stock trades, right? So I keep my account in terms of trading positive. So whatever I put in, I've got that to trade with, and I want to invest whatever profits I make. It's not a bad trading plan, or a bad investment plan. However, I kind of want to separate it so that I can see my stock trades and my investments more separately. And I want to be more particular about putting in investments even when the market moves down. And this is where the real trick is here, right? When the stock market's moving down, I'm not going to be trading as much because I'm only trading upside trades, right? So that means less profits on stock trades, less investing when I should be investing more because I'm being able to buy stocks at a discount. So instead of this, what I'm going to say on my investment money, where's my investment money going to come from? It's going to come from the same place as my personal checking account. So I am going to, what I'm thinking I want to do is do about 50% of my cash I put in will be for investments. Investments, right? So basically my plan here is put about half of my account into investments and then hold those investments for a longer time frame. Great. Perfect. So basically the idea here is what I'm saying is when I put cash in my account, I want to put about half of my account into investments at any given time. The reason I'm saying that I want to hold those investments for a longer time frame is because when I put in half my account, so let's say right that I'm investing over time. I've been investing for a month or so. Let's say that, and then I've got some money in my investments, and the market starts to drop. Now I'm not trading as much, so my profits from trading are not going into there because I'm not really making any profits. I'm not doing any trading right when the market's dropping, and my investments are also dropping. Means the value of those investments are going down. So the overall account value and the way it's going to show in Thinkorswim will show that I have less money in the account, which is true, right? And so what that means is that maybe more than half of my account value is going to be in investments, but I don't want to sell my investments and rebalance all the time. That's something that some hedge fund managers and sort of investment advisors will tell you to do. I understand why, right? It's a fine thing to do, but I don't really want to do that with this. It makes it complex. It makes it honestly a little bit confusing, and it takes money out of where you want to keep money. So I don't think I'm going to do that. What I'm going to do is basically I'm going to say, hey, I'm going to put half my money into my investments. When I have investments, I'm just going to hold them. So if if that 50% changes, it's not the end of the world. is all I'm saying there. So a little bit of a different plan here. Next up is how I'm going to manage risk on my investment plan. I said I want to look at actual things on the stock charts to determine my exits, look at EMAs, look at support lines, look at long-term trends. I think that's fine. I also, also want to focus on fundamentals. Fundamentals so that, I don't just take exits when stocks are moving down on charts and on companies that are really set up to go up in the long term. So, I'm basically saying here, look, focus on fundamentals. Don't sell too early. Right. I mean, keep that long-term perspective. Keep that long-term perspective. So I'm still going to be willing to get out of investments from time to time when the need calls for it, right? I've made investments in this account. I've gotten out of them for those EMA reasons. Not a big deal, but I also want to keep that longer term perspective where I allow my investments to work the way that they're supposed to work. So just clarifying that. And then what type of investments do I want to take? I think this is pretty much perfect. I can reword it a little bit, but companies with strong fundamentals that are well established and that pay dividends, right? That pay dividends because I really do like dividends. Strong fundamentals that are well established and that pay dividends. So anyway, not a huge amount of change on most of this. The big thing here is, right, I want to put more into my investment account or more into my investments, right? It's the same account. And I want to be able to do that even when the market's dropping. So I want to, I want to take advantage of the way that investing can be really beneficial. So changing my trading plan a little bit in accordance with that. Hopefully that makes sense. You guys can see, see why the trading plan would change, see what the trading plan is. Hopefully it was a good review. And you can see why if you're only trading profits and you're only trading uptrends, that can be kind of hard to make investments on at the opportune time, right? When the market's dropping is when you want to make investments, and if you're only trading in specific times that's not conducive to that, then you might take less good investments. So that said, right, hopefully that makes sense. Updated my investing plan, and that can be good to do from time to time. So hopefully that was helpful, and we will see you guys for the next video.